Volatility rears its ugly head and panic ensues.
So, Professor, would you say it's time for everyone to panic? Yes, I would, Kent. Hordes.
Well, not really. Is this the beginning of a new trend or the next buying opportunity? Stay tuned, we'll discuss this and much more. Hello, this is Michael Loftus for Wealth and Wisdom TV. First up, if you find today's video of value, please consider subscribing. Also below, click show more for additional links and information on today's video. So, where do I start? Of course, as a longtime sufferer / Eagles fan, it finally happened last night. So I'm a little hoarse this morning. Hopefully we can get through this whole video. So, highlights from last week. Dow plummets 666 points. The violent market sell-off was easy to spot. Well, yeah, of course, right? And then a scary Friday could lead to a scary Monday. We're going to confirm that at this point because futures are looking pretty rough. Bond prices slide with bubble warning. So the big story last week, the stock market drop is about one thing. Fear of rising interest rates. It's as if everyone just woke up and said, wait, this is really happening. I mean, we've been talking about this for weeks, and all of a sudden, the market goes crazy on it. The other big change is good news is now bad news, okay? Why? Wait a second, because this summer, bad news was good news. Are you with me? So good news, unemployment is now bad news because the thought that we are in fact going to continue our raising of rates. So a lot of reasons why the market was very volatile last week. So let's get to it with the numbers. Across the board, still positive here on the big boards, but obviously deterioration, small and mids continue to lag. So let's get to the big charts. First up, this is a 15-minute chart. I can go as low as a 1-minute chart, but here's a 15-minute chart showing last week's decline. And yeah, across the board, excluding a little move up there on Wednesday, it was ugly indeed. You also see a lot of selling pressure at the end of each day, as well as selling pressure opening up. So neither of those are very bullish, and we have a lot of sell pressure. So looking at the charts, what do we see and what has changed? Well, yeah, structurally, we did see a big change here on the short-term daily chart. What is it? Well, first off, if you look here, we're still up in a bullish trend, but obviously we broke down a little bit. Now, at the top of the chart, relative strength. We have been overbought for quite some time. Now, we broke 50. Let's see what happens if we can hold that around that area and come back up, or do we go down to the 30s, which would really point to a bigger sell-off? The other thing at the bottom of the chart, momentum, MACD. All right, I'll have Michelle zoom in. We did have a negative crossover there. So because of that, our short-term signal has gone negative. Now, again, I've said this in the past. It doesn't mean we're making any changes. New money, we're going to hold off, and we're going to see if this is another opportunity. And then at the very bottom there, I added volatility, the VIX. We had a 47% and change spike from the beginning of the year, so volatility is indeed back once again. So, going to the next chart, S&P weekly still looks very nice, right? Definitely in a bullish uptrend. Last week we came down. RSI still fairly strong. Momentum at the bottom continues to go up, but little button hook there. But all that being said, we are still positive on our midterm weekly chart. The next one is monthly. And again, you would expect this. We are still very much in a bullish uptrend. You see momentum there still pointing up. We've come back in extreme overbought conditions to now still positive. So as I would expect, we're still positive on our long-term monthly chart. Now let's take away all the noise all the signs, signals, and just put in moving averages. So the average price on a 20, 30, 40, and 50 day. And looks great. I mean, it's still very much pointing up. Really no deterioration here whatsoever. So again, another reason why we're holding off on any signals short term or making any swift moves. Next, let's get to the sectors. Okay, so looking at the sectors, as expected across the board, broad sell-off, no surprise there. So from that, what is now on my radar? Well, we've been talking about oil for a while, so I'm going to continue. Oil price stabilized last week, no big hit. In fact, here's an article from CNBC. Goldman Sachs say it's going to 80 in the next 6 months. Now that being said, the big names, and here's the Titan 30, got hit really bad last week. So if you're not into some of these names, take a look. This might be a decent buying opportunity, but to be determined. I would like to see some stabilization here. The next one, biotech. I love this sector, but you're in or out because it can be volatile at times. Now this is a weekly chart, and you can see that is a classic cup and handle structure. You see the cup there, the handle, and then our breakout. So really like the way the biotech is setting up here. And if you're not looking at this, this is a good opportunity. Might look to add a few accounts this week. Next up, banks. Yeah, we had a pretty decent pullback last week, so this might be an opportunity to get in. Rising interest rates, you would expect that the bank financials will continue to go to the upside. So the big story, treasuries last week. Where are we? Well, yield spreads, 10 minus 2 years, has really gone up to 0.69. Not surprising because the long-term curve is really going up now. So you can see it here, 2, 5, 10, and 30 really pushing to the upside. So a definitive concern. But here's the chart at the beginning of the year I said was the most concerning chart going into 2018. Here's your long-term structure of a monthly view of 10-year treasuries. So when you look at this, if we break out, which at this point we're getting close, that's probably a 3% line, then we can call the bonds really a bear market. But we're still in there. I think there's a possibility with this volatility to still come back. But for now, we're still moving to the upside. So, next up, what keeps me awake at night? Well, last night, tossing and turning with joy of the Eagles' victory. But then I look at this chart and I go, wait a second. This is the Federal Reserve starting to sell off their balance sheet, starting to shrink it. And look what happens here, and guess what? That's about the same time we saw the hit last week. So we are in uncharted territory with the Fed starting to reduce this balance sheet. So definitely a concern we'll continue to watch. Next up, the consumer. I've been saying this for a while. Where's the consumer? You can see it in retail not doing well. Here, continue to spend more than they make. Really concerning, which tells us why the overall savings rates continues to dive, which is not a good sign either. Next up, transports. Transports moving all the goods obviously around the country, what's being sold in a big breakdown last week. Yes, the market broke down, but this was a big one. So when I look at this, transports can be a leading indicator, so we're going to continue to watch that. And last but not least, we're still way overbought. When you look at the long-term PE average, we're almost still double the long-term average. So, you know, I know a lot of people say it doesn't matter, and obviously we've gone up and we've sustained, but the fact is we're still way overbought even with our sell-off last week. Wrapping it up, fear and greed, as expected, 79 a week ago, down to 40. And all signals, as we said, short term has gone negative. We'll call that neutral. Midterm positive, long term positive. As always, we thank you so much for watching. This is Michael Loftus for Wealth and Wisdom TV.